Oh, hello. Hey, sorry guys, I think I was on mute there. I'm going to start again. So, good morning, good afternoon, good evening, and welcome to the Bull versus Bear webinar. Steve Miley on the call. If I'm repeating this, you've already heard it. My apologies, but I think I was on mute. So I started off there, and I think I was on mute. So yeah, what I was saying though, when I was on mute, today's the Wednesday, the 9th of November, TradeDay.com Bull versus Bear webinar. So yeah, what I was saying though, sorry guys, was that markets are a little bit more subdued. I find at the moment. Yeah, we had a big chop down and a big chop back higher yesterday. So there's still intraday volatility, but generally things are a little calmer than they have been thus far this week. But we'll go take a look at everything that's going on. Obviously, midterm elections fully in focus. So if I'm repeating myself, if you heard all this again, my apologies, but I think I was on mute at the start there. So calendar-wise, it's light, right? So it's a light week. It was always going to be a light week. We've got the midterm election results coming through, and we've got CPI from the US tomorrow. I mean, light data, nothing really of note out of Europe this morning. And then into this afternoon, we've got crude oil inventories, 10:30 Eastern time. That's the real focus for today. So a very, very light calendar. If we look at 5 things you need to start your day, midterms. So Republicans, it looks like, are going to take control of the House, okay, but not by as big a margin as previously expected. And it looks like potentially it's too close to call, really, at the Senate, and looking like a race in Georgia. And yeah, that's going to be very, 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 very close, right? So yeah, so I was muted. Okay, so you can hear me now anyway. So yeah, there we are. So we have the midterms fully in focus. The kind of red wave, the GOP wave, not quite as big as as probably anticipated. I think the market has been rallying anyway. The stock market's been rallying in anticipation of that red wave. And it's certainly then meant that we're kind of just seeing markets a little bit more subdued going into the day. A little bit of buy the rumor, sell the fact. We've had the red wave. Yes, the split of the legislature means that we are going to have a little bit of paralysis, and the market likes that because it likes consistency, right? The market doesn't like change. So all of that's positive, and we've probably seen that over the last 2-3 days. The rally that we've had, not so much from Friday, but I think this week has been driven by that expectation of GOP taking the House, and then obviously the Senate a little bit too close to call in here at the moment. But I think if the Senate, if the Republicans take the Senate as well, that's even more paralysis. So it probably gives an upside push again, follow through. If the Democrats take the Senate, I don't think that makes a big difference. And from what I've read as well, there could be a runoff if neither candidate gets more than the 50% of the vote. So I don't know how that's going to go. It's not my specialist subject, midterm elections, but nevertheless we wait and see. On the crypto side, I spoke yesterday about FTX potentially being in trouble. I think I did anyway, and I was writing about it separately yesterday. And it turns out they were in trouble. It wasn't just rumor. And now Binance have come in and bought FTX. It's having a negative impact though. So we've seen the major cryptocurrencies lower over the last, throughout this week, really, last 24, 48 hours in here on the back of that, due to a liquidity crunch at FTX. Binance stepping in to buy them. Austerity in the finance world continues. Citigroup, Barclays as well, looking for job cuts there. And we've also seen announcements. Well, it's kind of a little bit slightly old news, but I'll talk about it in a bit, with Meta as well. So little change on equity futures going into today. We've obviously got the CPI data tomorrow. It could be a quiet day today. I wouldn't be surprised to see a relatively quiet day unless we get something surprising coming out on the results in here, and nothing really massively significant on the data front. So just going through the headlines, US futures wobble, yeah, but I mean slightly down. We're not down much, having had a fairly strong run up over the last few days in here. Midterms return mixed verdict, and then cryptocurrencies, as I say, down on the back of that. FTX Binance news, futures edge lower as race for control over Congress tightens. World markets await midterm vote. Yeah, all this. Morning big Congress unswept. So unswept, crypto a mess. All the same headlines. US inflation looking ahead to tomorrow to cool only slightly, keeping big Fed hike in play. So the forecast for CPI tomorrow not showing a massive cooling in inflation. And so the Fed potentially still going to go for that bigger rate hike. But then look at the Fed Watch tool in here. We're sitting here. This is slowly creeping up, right? This was bigger before, and now this one's more chance now of a 50 basis points than a 75 going forward into December. December's going to be definitely very interesting if it stays like that because we should get a big reaction. So overnight in here, also I've got a few more Mr. Carney, so the former head of the Bank of England in here, says that he sees risk of US inflation may spur Fed to be even more aggressive. European stocks have dropped slightly. They're putting it down to ahead of the CPI data, the US CPI data. I think that's just a journalist fitting a story to the price action. US mortgage rates way over 7% now, near highest level since 2001. And Meta now announcing up to more than 11,000 jobs in one of the biggest layoffs this year. Crypto again, spoken about that, FTX Binance. Tesla still remains under negative pressure. Musk has sold nearly $4 billion worth after the Twitter deal went through. And so Tesla has been certainly underperforming as the broader market has bounced the last few days. Tesla's continued lower. Looking at the European exchanges, we did get a dip after hours in here in the US. So the European exchanges following the US on that dip. And we're down about between 0.25% not a big dip in here. And then if we look at overnight in here, so we're up about 0.5% higher. NASDAQ was a bit over 1% yesterday on the US exchanges. Well, NASDAQ's pretty much unchanged in here going into this morning, and we're down about 0.25% on the S&P and the Dow going into today. So let's take a look at the chart. So we have had this dip back lower. We had a strong rally. It was very choppy yesterday. So we were up initially, back down again, back higher, lower overnight, and then a slight dip again in here overnight. This is the S&P 500. So you kind of, what we've got in here at the moment is you've got multiple different trends on different timelines being reversed. So you've got this down leg. So actually the bigger trend that comes from the year, okay, that's still very much intact. So you can see that, coming all the way down here. So you've got a succession of lower lows and lower highs. We haven't got really good data in here on the high up here on the deck contract. But, if I kind of say that that's good enough data from the beginning of the year up there somewhere, the trend line's coming in all the way up there. So we're way off reversing the bigger trend, right? But what we have reversed is this down leg, the down leg that we've seen from the middle of August. We've reversed that, right? So we've got through the trend line and we've got a high above that high there. So now you've got a base in regarding this downtrend. But then the sell-off that we saw last week reversed the recovery trend, right? So we reversed down through the trend line. And here on the S&P, we were just below the 50%. We gave back half the gains. And now on the rebound, back higher here, if I step in on this bit here, so last week's sell-off and this week's rebound, if we go into here, what we see, there's the sell-off and then the rebound. We're up through the 61.8% of that. So if you look on every time frame in here, apart from the bigger bear trend that goes to from the beginning of the year, the down leg from August has been reversed by the October rally. Okay, the October rally was reversed by the late October, early November sell-off. And the late October, early November sell-off was reversed by the rebound that we've seen this week. So on every one of these trends, that trend has been reversed, that trend has been reversed, that trend has been reversed, and now this trend is still up intact. So what the bigger dominant bear trend is still very much intact, but we're not trading on that. So all of these trends in here have been reversed and are kind of neutralized. So where's the dominant trend now? Well, it's really the current one, which is this up one. And is that still intact? Well, if we go and take a look at that, there's the trend there. We could use, maybe it's going to allow me now. You know what? I'll get rid of that in here. And we're through all the retracements here. If I actually put on I think we went right up to, I was looking at this earlier on. I think it was on the S&P, may not have been though. Let me just put in the 78.6. So you can use in here, some people use 78, 76.4, 78.6 and 76.4 are two different Fibonacci numbers. Slightly, they've got different derivations, but they're in the same area. I always tend to use the higher one just because you want more confirmation. Works quite well. Look, you've got some highs there as well. We did spike through that level. So we didn't get up to the 78.6, but we got way through the 61.8 on the rebound in here. So, yeah. So where are we in the uptrend? Well, for me, that's kind of still intact, right? So if I go in here and I go through this line here, we're just about holding that right now. Look, we make it decision time. And it's no surprise, we're going into a major event. It's decision time. We kind of chopped up in here yesterday, didn't we? So we went higher initially. We went back down lower. We got a good rebound, and now we've drifted off lower. Then we've rebounded, and we're back lower. So we're flirting with this trend line. Down through today's overnight low in here, it looks a lot more negative. This becomes more like a topping pattern, right? It's rolling. You've got like a spike. It's almost like a head and shoulders. It's not head and shoulders, but you could say in here, look, these are tenuous shoulders here. These are tenuous shoulders here, and this is a tenuous, spiky kind of head up here, right? So it's a head and shoulders-esque type. None of these are perfect patterns, right? There's no real decent neckline to draw on this, okay? But you'd want to see a break, even below that low, obviously that low. And you could even take this old low that's already been broken because we did chop down below that yesterday, big chop and rebound. So, these are the supports I would be looking at. The overnight is coming in at 38.12. The one, this kind of shoulder low in here, this previous swing is at 38.00, and then down here is all the way at 92.75. I think 38.12, it starts to look a negative again, particularly because of this trend line. It's not the best trend line in the world, right? Because we haven't, since this low, we haven't gone to a new high. So it's not the greatest trend line, but then the fact that we went down to that this morning kind of held it. We've gone down to it again now and kind of holding it. I kind of like it as a little trend line. It kind of works, even though it's not the best trend line. So I'm going to go with that, right? So if it breaks below this trend line and I want qualification then below the overnight low, as I say, 38.12, then reinforcement through 38.00. You take out 38.12 and 38.00, this looks a lot more negative. However, as I said, the underlying higher highs and higher lows is kind of intact. Yes, it is spiked down through 38.00, did damage that. So we did get a lower low there, but it quickly recovered it. But then we haven't made a higher high. The market's in decision making, right? So you've had higher highs and higher lows all the way through. Then you chop down. You could almost draw this like what I like to call an internal trend line. You've got this internal trend line that runs up through here. Look, so not taking it off the low, you've got this one here that works really well. This one through here, look, working really well. Multiple touches on that trend line. And then yesterday we chopped down for it and back above it, and now we're below it, right? So it's reversed this one, but it's flirting with this one. Okay, so the market's in decision time. It made a lower low here, and now it hasn't made a higher high. So the market is now in that consolidation phase regarding this uptrend, which comes from pretty much the end of last week. Okay, so what's it going to do? It's decision time. It's no surprise we're going into like kind of, you've got two big events, right? You've got the midterm result and you've got US CPI. Is it going to break? I don't think it's going to get below that low. I don't think it's going to make a massive bearish statement before the CPI. It could continue the trend higher. Given that trend is your friend, there is a threat we could go higher. I don't think it will make a bearish statement below there ahead of the CPI. So between the next 24 hours, I think it will hold that low. If it takes out that low before then, we could see a more significant liquidation. I don't think we'll see it. I still want to play this slightly from the buy side, but I'd want to see qualification on through the top side. So I'd be looking for a break above that little triangle. So we never got this triangle going on in here, right? I'd want to see a break at least above that. So the recent peak will take you through the triangle as well, just about. So the recent peak is coming in at 35, and then reinforcement comes through 45. So 35 and 45 upside breakout levels. Let's kind of do the similar for the NASDAQ. In here, in no man's land in here today. Again, this trend was reversed by that move. That trend was reversed by that move. This trend is reversing this move. The NASDAQ all looks a little bit more negative, no surprises, than the S&P. If we step in, though, and go to the 15-minute chart, you've got similar kind of stuff going on. The rebound didn't take us quite as high in regard to the downtrend, the down leg here. Okay, but we did get above the 50% and just didn't quite make the 61.8%. Now we look at the same trend line on the way up. This one through here now. And look again, flirting with it now, right? The internal line that I drew before here, that was a good line again. That got reversed, and now we're trading below that one, right? So this one below, this lower line's now going to be important. Back through the overnight little low there is 11.01975. So down through there looks more negative, okay? And then you've got this other low. Remember, this is the equivalent low over here. That is 10.95475. So those are going to be two trigger points to the downside. Where's the upside? Again, slightly erring towards the being long in here. There's the triangle line up through the recent peak. Would be the little peak from the last 30 minutes or so. A bit longer, that last hour or so. That is 11.10825. The trend line comes in at the moment around 11.125, 130, and then this peak over here is 11.154.5. Those would be my bullish trigger points on the top side. Right, quick nod to commodities, and I do want to take a look at both gold and oil in here. If we go to gold, look at that move. Another massively impulsive move for gold on the top side. Really big move in here. Let me take off this because I'm losing some of my... Let me take off the ATR. 1 second. Why can't I get that off? Could I forget where this is? I use so many different platforms, guys. I'm going to leave it on for now. But a massively impulsive move, a hugely impulsive move in here. We'd already broken above this big downtrend line that comes right after high from March. I've got this in my reports. So if you go and take the line from the top in here, it's a really good trend line. Look at that. So you come and you approach it here, move away. You approach it here, move away. You touch it here and move away. We got right up there. And actually breached it just about on it was on Friday. Then we paused on Monday, and then yesterday blasted through that trend line. Okay, so really important technical bottom. You've got a triple bottom potential in here. It needs to get above that high there. That's a critical level for gold on a bigger picture. That high up there is 1738.7. Through there will be a really big bullish statement. Triple bottom goes in. Okay, for now, if I step in on the 15-minute chart, there's the impulsive move from yesterday, really impulsive move. And you've got kind of this flag pattern went on, right? So there's the impulsive move from, it was Friday. You get a flag goes on and then we go again, and you're measuring. If you measure this, it's almost, it almost hits the measure. So the measure would be this distance here measured from the breakout up there. And now we're kind of flagging again. Yeah, it's a little flag. Probably a little bit of a pause session today, but still can only play this from the long side. I don't know how you can play this from, and you're working off overbought conditions with this sideways activity. We had a little bit of dip. You had a few lower lows and lower highs. Again, I'd want to see qualification on the upside. So, you've got almost a horizontal line going across there. Really up through that 1717 would be a bull trigger for me, or just through the highs. But looking really bullish on, and then conversely on oil, topping pattern going in. It rolled, it all looked quite positive. We did get I was still coming into this positive yesterday, but you did get this hammer pattern, negative hammer pattern. We did break above that peak. It all looked really bullish. 3 days ago, on Friday. Then you get a push higher even on Monday. Still looks bullish, even though it's set back. You get this, not hammer. Did I say hammer? That's not hammer. Shooting star pattern. You get a negative shooting star pattern. So it all looks a little bit wobbly. And then yesterday, boom, big down day, boom, down again today. We took out these supports in here. It all looks very negative on the oil side. And if I go into the 15-minute chart, you can see, look, just capitulating now. Took out this low in here. Looks really negative. We are getting a bounce at the moment. I think you don't sell it right now, but any kind of rebound, anything back up towards like 8800, it looks like you want to be selling into it anywhere up there. Looking very, very negative on the oil side. All right, I'm going to wrap it up there, everyone. I'm going to wish you all, as ever, a great trading day. Stay safe, and I'll be back with you with another Bull versus Bear webinar tomorrow. Bye.